Welcome to our podcast. This is Friends on Fire.
I'm Mike. I'm a lifelong devotee of financial independence. I even wrote a book about it.
And I'm Maggie, a newer convert, but just as passionate, especially on the intersection of minimalism and financial independence.
We're one and the same.
We are two like-minded friends who believe that talking about money with your friends and family opens the door to financial well-being.
The Friends on Fire podcast is about dispelling myths, building financial acumen, and sharing your financial independence journey with the people you care about.
This is Friends on Fire.
Hey, Mike.
Hey, Maggie.
How's it going?
Pretty good. How about you?
It's going good. So this show is a topic I'm super excited to talk about, but it was a very last minute plan of a topic, which I can't believe I didn't think about in advance. This is probably somewhere on my idea list that I've just not gotten back to. But it started with you sending me a text this morning. And I want you to say what your text was. And you didn't really even ask me a question. You were just like, what do you know? I don't know. You tell the story and then I'll tell you what happened.
Right. I don't need to go into my life story about it. I think you understand my request.
You can tell the story in 30 seconds or 10 minutes if you want to take my route.
I got a letter in the mail about my property tax from some third party that does appeals, and they take care of everything and you pay them a fee. And financially, it seemed like a good move, but I have no experience with this company or these types of things. And so I texted you a picture of the letter and asked you for your thoughts. And then you were like, we need to record an episode about this right now.
Well, the reason I said right now is because in our area, the deadline for filing appeals to your real estate property tax assessment, your annual assessment that you get in the mail, it's in like 2 weeks, right? What's the deadline? What's your deadline? My deadline is July 16th.
Yep, me too. Well, we're in the same county.
Yeah, we're both in DeKalb County, Atlanta, Georgia, for those who care. One caveat on this is I know a lot about this in my county, and I've successfully done this multiple times. I don't know how it works in other areas, but my general understanding, at least in the United States, is there's a similar appeal process. If you own a home, every year you get a notice, which is an advance notice of what your taxes have been assessed to be for the next year. And they let you know what they've assessed it to be. Usually there's an increase. And then you have a period of time to appeal it, which is, very clear on the top of the letter. It'll say like last date to write a written appeal. And then once that appeal period closes, your property taxes are locked in for the next year and you now owe that amount. Or they will put a lien against your, I don't know, a whole complicated process. So it's not negotiable after that point. But what's interesting to know is it is negotiable. And just to take a step back here, Mike, I have learned so much from you over the years. The reason I was so excited is because I was like, oh my gosh, I can finally teach you something. Every now and then, not that often, I am able to teach you something that I know about in the finance space, I mean. Mm-hmm. And it rarely happens. So I know this is probably making you very uncomfortable, Mike.
Not uncomfortable.
You just want me
maybe
to get
a little
to the
bit
point.
uncomfortable. So my caveat is that I don't know anything about this. Never done it before. It's never been of great interest to me. And so there are no show notes for me to read from. I have no expertise or experience in this area. And so what you guys are hearing with this conversation is in real time, me learning something from Maggie.
Yeah.
So let's go.
Well, so that was the idea. Is I kind of told Mike, I was like, well, I don't even want to like spend 10 minutes explaining this to you. I was like, let's just do a show on it because it's a topic we haven't covered. And if you're a homeowner, it's a really interesting topic. A homeowner or a investment property owner. So this is actually something, Mike, that I think you'll find helpful and profitable on your investment properties also because exact same process and situation. You may be in a different county for some of those though. So let me start with the point of you can and should appeal your property taxes on we're talking about real estate, obviously. So property, they can be really expensive. Like Mike, just to give people a sense of kind of how much we're paying in real estate taxes on our properties. How much do you pay a year? Last year? $5,500. Okay. I paid $5,400 last year, and mine I just got my assessment that they were going to go up to $6,109. So about $700. What was your assessment saying you're going to go up to?
I don't know. I filed it away, but probably the same.
Look it up though, and let me know at some point later if you can. So the point is, your county will keep trying to raise your taxes every year, and look, they should to some extent because the rising property values, et cetera. But they're going to try to continue to increase your taxes every year. And if you go back and look, you'll see that it's a slow and steady increase. Some years it'll be like a big increase where all of a sudden you're like, wait a minute, every year it goes up a couple $100 and I don't totally notice. But then one year I'll get a notice where it's gone up $700 and I'm like, wait a minute. And that's usually when I'll take a step back and appeal. So I appealed on the same property I live in now. Actually, I appealed successfully in 2011 and then again in 2018. And I'm about to do it again right now because the $700 increase is unreasonable.
So I got $800 increase.
$800 increase. That's a lot. And that's, $800 that's now compounded every year, right? Whatever increase they build in next year is now off that extra increased amount. So when you save $800, or if you're able to get it down by, $600, which is probably about where I think you'll land, you're getting that benefit, every future year after that, because your assessment's just going to keep trying to increase every year. So I started by saying that you can and should appeal your state property taxes. I actually think this year in particular is a very important time to appeal your property taxes. If not this year, then next year, because the market right now is crazy. In almost every city I'm aware of, I'm hearing of, especially, I know it is in Atlanta, I hear from friends in many different cities, housing prices are going at just irrational prices in some cases, right? There's bidding wars on homes. And the reason that matters is the price a home is selling at, those comparables, which we're going to use in your appeal, or that company will use in your appeal, or you would use if you do this yourself, they're going to be really high. And all the examples over the past 6 months are really high, but it's like the examples you can get from even just 2020 are much more reasonable and are going to help your case in a better way. So as property increases, as property values and home sale prices start to increase, it can be harder to find the helpful comps that you need to reduce your taxes, which it'll make a little bit more sense when I go through this.
So Maggie, what do my property taxes go to support?
That's a good question. I could tell you just from my own bill, they go to support hospitals, schools is a huge piece. I mean, a huge piece of everyone's property taxes are schools, to the point where when you're over a certain age, much older, like 70 something, and you quit paying the schools, people's taxes go from like $6,000 to like $1,400 or something in our area. So they go down into the $2,000s. So schools is the largest portion of it, but police, fire, I don't know what county bonds is, sanitation, stormwater fees, street lights. There's all sorts of things, but it goes to support. Are you implying that we shouldn't be trying to lower our taxes?
No, I just think it's good context for people.
Yeah, no, it's great
because it's not that you are, paying the man $5,000 a year and it's going into some black box. These are actually, you're paying money to support the things that you really utilize.
Yeah. And look, if you want to pay more in real estate taxes because you think that's your civic duty, go for it. I'm talking about comparables. So I don't want to pay more than my fair share of real estate taxes. And when we go through this, you'll see where there's cases where people are paying more than their fair share. And you'll start to look at your neighbors and others and say, wait a minute, why am I paying this much and they're paying that much? Which is what you're going to do. Okay. So a couple things about property taxes in general before I get into the process of appealing and the different ways you can do it. Similar to kind of what we were explaining on Mike asking what they go towards, which I know you know what they go towards. It's just like laying up questions for me. There's a couple things that are important to understand. Again, probably a little bit different in each area, but there's, I think in most areas, there's something called homestead exemption, right? That's everywhere in the US, which means you can only file for homestead exemption on your primary home. And if you have multiple homes, you have to choose one. Usually you would choose the one with the highest taxes. And I mean multiple homes as in like, I know people who are retired who live in a couple different areas and truly have multiple homes. They have to choose one to file for homestead exemption on. And that will reduce your taxes by, like a couple thousand, maybe 1,000 or two is that amount, I think, just from my experience with rental properties.
Again, I have no idea.
Oh, really? Well, I think I've looked before, and I think it can be in the kind of 1,000 to 2,000 range. In our area, again, it can vary. The other piece that's important to understand is you can apply for something that is called assessment freeze on your taxes. And a lot of people do that right when they buy a new home. So like we should do that on all of our rental properties, Mike. If you haven't already, you should apply for that freeze. You cannot apply for homestead exemption on your rental properties, obviously, but you can apply for the tax freeze. And it may have already been done by someone else. And I will say I'm not the expert on these tax freezes, so I'm not getting into that in as much detail or really any detail, but it is something you should look into. And then, the other thing, which I already mentioned, but is just your taxes are going to constantly rise as they reappraise your home, and which is why I've never fully understood the whole freeze point of like I think they're freezing like the rate at which you're taxed, but they're continually increasing the assessment of your property, which is the part I'm arguing is not the rate at which I'm taxed. You can't argue that. You can freeze it, but that's it. But you can argue that you're saying, look, you're overly assessing the value of my property, and so you're charging me too much taxes, which is what you're doing in an appeal. So let's go back to what we said at the beginning. You get this annual assessment every year. It reminds you of the deadline that you have to file a written appeal by, and you can decide to file a written appeal. I think most people take that letter and kind of just like file it away and are like you kind of did, Mike, until you saw that someone said they could argue the taxes for you. You just kind of filed it away and we're like, oh, I'll get my tax bill in a few months and then I'll pay it. Or this might actually be if you have a mortgage, which we don't have, so we directly pay our property taxes. If you have a mortgage, your tax bill is actually rolled into your escrow account for many people. And it's like even more hidden. You don't even notice it, right? And so that's one where I think a lot of people are probably not realizing how much their taxes have gone up over time, because it's $50 a month, which is $500 plus a year. But it's smaller amounts that you maybe don't realize that your mortgage has gone up by, because your escrow amount is adjusting each year to adjust for increased taxes. So it's really something you should go and look at. The cool thing about property taxes too is it's public information. So I do this all the time when I'm curious about like a home that's sold in my neighborhood or something, but you can go search. You can search, as my kids say, quote, search up. They use as like a verb. Do your kids say that, Mike? My kids say like, can you go search up something? We were making slime earlier. Can you go search up a slime recipe?
My kids tell me to ask Siri. That's how that's why they use the term.
So you can go and search up, you can type in, DeKalb County property tax search. And then when you get to that site, you can type in any address. You can see all of their tax bills for like the last 10 years. You can actually, when you're looking at like rental properties, you can see if people haven't paid their tax bills and something's kind of delinquent about the property. There's a lot of cool stuff you can see on those sites. So this is all public information.
Fun fact, Maggie, my property taxes have actually gone down every year for the first 8 years I own my home. This is the first year my property taxes have gone up.
Shocking. Have you gone to look at the detail? Have they gone down because of the assessed value of your home or because of tax rates in your neighborhood?
Tax rates. So the assessed value, I believe, has been flat this entire time.
Really?
So I've never looked into this because I'm not going to argue that my taxes are going down.
That's so interesting. So let's walk through what the process is.
Okay.
So there are two ways you can do a tax appeal. Like you could probably argue there's lots of ways, but I'm going to break it down to two basic ways. One is you can hire a third party to do it, like the letter that solicited you, Mike. Mm-hmm. And that company's name is Equitax. I'm not going to vouch for them one way or the other, but that is their name. It's like Equifax, but Equitax. It's kind of funny.
You really want to anchor yourself to a company with a great reputation like
make
Equifax.
Totally different logo, but make it rhyme with a well-known, reputable company. So you can hire a third party to do it, or you can do it yourself. Like many things, that's a personal choice, right? And there's some trade-offs with both. If you don't have the time to do it, if you don't have the desire, will, trust, whatever, then hire a company and try it. And I'll get into that process in a second. If you are able to do it yourself, and I'm going to walk you through how I do it myself and how I have successfully done it myself. If you do have the time, I suggest you consider doing it yourself. It's actually a really fascinating process. It's not that difficult, and I think it's kind of a cool process. And you learn a good bit about what you're paying. And Mike, you and I always talk about this. Like there's so many financial things where like I've never really like looked at the amounts and the fees, and I don't realize what's happening with certain areas of my money. And you're kind of like shocked by it, and you know all the fees, and you kind of like know everything about how this program works and like different benefit programs at work and DCP and stuff like that. And I just think it's interesting because this is a similar situation on something where you've just never had the like interest or desire. And I think your taxes staying flat for so long certainly is a big reason why you've just not had a need to mess with it.
Mm-hmm.
Though I'm still. We'll have to do it probably after the show, but I want to look at yours and see if I can find helpful comps. So the process of using a third party, here's what I will say about that is when you hear me talk about the DIY approach, you'll see exactly what they're doing, and they're able to like automate and scale this really easily because they probably have a massive database of all the sale comps from the last year or two and they can just run it by zip code and pull up a bunch that work for your situation. And it would be really easy. It's really easy low lift for them to do. So this is a very high profit business for them, I would imagine. And Mike, I'm sure you noticed this in your letter, but they charge you a flat fee and then a percentage of any savings that they get you. So it was like they offered you, this is an interesting like anchoring. They offered you a lower fee, $250 fee and 35% of your savings, right?
25%. And then $150 fee with 35%.
35%, right. So they're offering you essentially a lower upfront fee, but with a higher percentage that they're going to take of whatever they make your savings on. Or whatever savings they get for you. Did that have like a money back guarantee written into it anywhere? Like, are they guaranteeing the results in any way?
I'm not sure.
So I would imagine some
I sent it to you to read it.
I didn't read the letter. I just kind of scanned it. But I didn't see anything when I scanned it. I was going to go and look at their website and see what they say. I will say, when I did this back in 2011, on the house I live in now, I hired a company. I also got a letter. I was like, this sounds like a good deal. It was very similar to what you got. I actually have a scanned in copy of the letter still. They did have a money back guarantee or a guarantee that if they didn't get you whatever, then you got your fee back. I felt like I was like, well, that's a no-brainer. No loss in trying this, And so I tried it. It worked. Because I had to submit the letter myself. They sent me the information I then had to submit. I saw their form. I saw how they phrased the letter. I saw what they said. And then I saw that they just like kind of walked through a letter that said, this is my property. Here's the parcel ID. I believe you have overassessed my property. Please accept. I'm literally like quoting from the letter that I've, borrowed from that. And I kind of rewrote it a little bit, but please accept this evidence supporting a lower assessment of my property. I included some kind of official language that they had of like each argument has merit in its own right and should be considered separately. I don't know. I mean, I kind of know what that means, but I just was like, that sounds good when they said it. It seemed to work. And then I said, I've selected these comparables of recent sales in my very close surrounding neighborhood. I believe my property is eligible for a reduced assessment, blah, blah, blah. I said, it says what they currently assessed my property at from a square footage standpoint, which I'll get into in a minute. And then they included a bunch of comparables. Comps or comparables of recent sales in my area and the price per square foot. That's the like money number that you need to find to compare to yours. And I'll get into more of that in a second. And so I saw that letter and form and I was like, well, that's cool. That's all they did. Like now I know how they do this. And I submitted it and it lowered my taxes. And you don't really even like in our county, it's interesting. You don't get like a, yay, you've been successfully, whatever. I just got a tax bill that was lower.
How much lower was it when you appealed it the first time?
Hold on. I'll tell you exactly what it was. So, well, this is when I did it myself back in 2018. I'd have to go back and look it up. But from 2018, my taxes would have gone, they tried to make my taxes go up to $6,056. They were in the low fives before that. And I was able to get them down to $5,451. So I asked for even lower, and I'll kind of talk about this in the strategy in a minute. But basically, I ended up getting over $600 off my taxes.
Okay.
And they're basically trying to now get me back up to this. They're trying to get me back up to like $6,100 again now.
All right.
And I have a ton of comps. So let me finish the third party thing too. If you want to use a third party, I just want to remind you of, again, what I did was I saw what the third party did, and then I was like, cool, I could do that myself. Thanks. And so again, there's no harm in using a third party. Just remembering when you see what is actually done, like they're just able to automate it and scale this. They're obviously making money off of this. And so you will make even more money if you do it yourself. But again, if the option is I'm not going to do either, or I'm never going to do it myself, and so that's not going to happen, then definitely consider looking into a third party. When you look into a third party, before you do it, I personally would go to like different neighborhood groups that are out there and ask people for their recommendations of like what company they have used and been successful with. Because this company, Mike, that you've mentioned, I've heard of them only because I've seen the letters before, but I've never used them. And so I wouldn't want to use that company before I ask like anyone in my neighborhood groups if they've, successfully used them before. So I would suggest you ideally look for a company that has some sort of a money back guarantee or a pretty low cost to entry. Like that $150 is kind of worth trying it if there's a big bump in your taxes one year. And then again, I would ask neighbors and friends and kind of put it out on different like neighborhood and Facebook, Nextdoor, those kind of neighborhood groups where it's a lot of people in your surrounding neighborhood. The other cool thing you can do is ask. I mean, you can ask, but you also can go look at what other people are paying in taxes. Like go look at and Mike, your neighborhood's similar to mine. A lot of the houses, we have very different house styles, but what's similar is that like all the houses in your neighborhood look the same. They're about the same size. Mm-hmm. Some of them there's probably some outliers. Mine is similar. There's 2 styles of homes in my neighborhood. Many of them are old ranches. And then a lot of them are people who have torn down an old ranch and built like a McMansion. And I'm not going to compare myself to the McMansions. I'm talking too much, aren't I?
Yep.
So you can do the third party route. Let me talk to you about the DIY route. Okay. So here's the steps that you have to go through. So you are going to want to go look at recent sale prices in your very close surrounding neighborhood, like the streets right around you in your zip code, like really, really close, not 2 miles away even, right? Like I would just keep it within like a 2-mile radius. There's a very easy way to do this, which takes maybe 30 minutes, maybe an hour if you've never done it before, to do this whole process. You go to Zillow, and when you just like you can kind of sort and filter by for sale or for rent properties, you can also unclick those and filter by sold properties. And it will only really show you, I'm not even sure what the time length is. You can probably go into the detailed results and change it. But when I do it, just basically change to sold, it shows me things that have sold within like the last couple of years, which is all I'm looking for. You need recent sales. So go in either type in your zip code when you do that, or manually zoom around your house, which you can do in the map on Zillow. And I would recommend you do this on your desktop. You could do it on your phone, but it's just a lot easier to kind of control this on your desktop. So you're looking for recent sale prices in the very, very close same neighborhood, zip code, and surrounding streets of your house. You're going to then take this and put a spreadsheet together. And this spreadsheet, which is only going to have like 5 or 6 columns in it, is going to be the comp set that you give in a very brief letter that you're going to send in your appeal, where you show why your taxes should be low. And the money number that you are looking for is the price per square foot. So you're looking for price per square foot comparables. I have a few more things that I need in this spreadsheet, but I think it's helpful to kind of err on giving them more information than not. So my spreadsheet has address, number of bedrooms, number of bathrooms, square footage, sale date of the property to show that I've looked at recent sale dates and not sale dates from 5 years ago or even 3 years ago, sale price, and then price per square foot. Every piece of that, 1, 2, 3, 4, 5, 6, my first 6 columns, I got the information off Zillow. The 7th column, which is price per square foot, I did the calculations of. And it's a simple Excel formula, which is, for those that need help on it, it is the sale price divided by the square footage. And I love one of the things I love about this process that's kind of fun, in my opinion, I think you would find this fun, Mike, too, is you started out by putting your own house in, which is the top of the spreadsheet that you're going to give them. You're going to give them a printout of the spreadsheet, obviously, but you put in your own house price. So I have my house as the first line, and it says my property 2020 value, which is last year's assessed value. And it shows the price per square foot. And so last year, they priced my house at $247 a square foot. Next year, they're proposing in my assessment they gave me that they increase it to $283 a square foot. So what I'm trying to do is find comps that support that I should be below $283 a square foot, because I'm saying you have overly assessed my property. And here's the thing that people need to remember. Don't get caught up on the price that they assess your property at, the total amount. It's not what your house, it doesn't ever match what your house would actually sell at. Ignore that piece. Do you know what I mean?
Mm-hmm. Yeah, I understand.
And just to be clear, like what the county assesses my house at is multiple $100,000 less than it would actually sell at, right? That's not the point. Ignore that. If you get caught up on that, you're missing the point of this exercise. You want to show what the county is assessing as your price per square foot. The fun part of this is you're now going to go look for other properties in Zillow. Some of the properties you see are not going to support your case. You don't want to include those in what you send in. Some of the properties you see, you'll start to put, like I'll start to put the numbers in. I did this morning, Mike, because it's been on my to-do list to do this and before the deadline this year. And so I start putting some in, and like the first property I put in, the price per square foot is $177. And I'm like, yes, that's one that's going to help me. The next one I put in, the price per square foot is $281. And I'm like, cool, not going to include that one in my thing. And I'm going to make sure I find like 20. You can, let's see, the last one I did, I included 21 properties. Just do it till you get bored. But I would include personally like over 20, because I think the more you can show, the more thorough it is. Showing a couple of properties is not going to help. They want to see a trend that they've got, a bunch of properties right around you that are assessed differently. And so again, you don't even have to go look at their taxes. You just need to put in the sale price and then their square footage. And again, I don't even know if you really need the bedrooms and bathrooms, but it can't hurt while you're in there. And you need the sale date. So I'll start putting properties in. The tip that I think is helpful to understand is if you just randomly pick every property you see in Zillow, you're going to waste your time, because you're looking for somewhat comparable ones. And you're looking for ones that are going to be good square footage to sales price ratios, right, for you.
Yeah.
So look for those.
So I got this list now.
Yeah, you got this
list. It's very thorough.
Yep.
Great comparable sales. What do I do with this? This is where I get hung up.
So now you take that list, sort it by price per square foot, sort it. And so I sorted it low to high on price per square foot. And I have a list. Again, I have my property at the top of what I'm going to use my 2020 example that I'm doing now. I show what they've assessed my property at for 2020, what they're proposing it be for 2021. And then I have 20 comps below it. And I've sorted those comps by price per square foot from lowest to highest. All of the ones I'm including, remember, I got rid of all the ones that are high and don't help support my case. All of the ones that I am including are between, in this example, they're between $150 price per square foot all the way up to $230. And then I'm going to take that is my backup material that is going to kind of make my case to them. I am now going to take that spreadsheet and I'm going to put it into a template letter. And we'll put a copy of a template letter on our website for you guys. And there'll be a link to it in the show notes. But you could Google like a template letter for a tax appeal and find, I'm sure, many templates. And again, this is one where you might get a good example from a neighbor or somebody else. I read off pieces of the template earlier in the show, Mike. But the template is very simple. It's literally a Word document, and it has it says, Dear DeKalb County Board of Assessors, and it's dated. It has my property. It says, I believe I've been overassessed. It says, here's the evidence for it. And then basically you need to ask for an amount that you believe you should be assessed at. So you can't just say, I've been overly assessed, like fix it. You have to anchor them. There's a negotiation. You have to give them an amount you think you should be assessed at. And that's what that's what that third party is going to do for you too, Mike. So what would you do, Mike, like in a situation like this of like, I've got all these cases that are way lower than my price per square foot. Like what amount would you throw out?
It would depend on what the results come back with.
So I'll answer the question for you. My point is you're anchoring a little bit, right? So I'm not going to ask for something ridiculously low because they're going to reject it. And it's a negotiation. They're going to come back with something between what I'm asking for and what they were already going to assess it at. I can't guarantee that. I'm just saying that's been my experience. Both times I've done it, they've not given me what I've asked for, but they've given me closer to what I've asked for than what they were trying to reassess it at. And so in that letter, you're going to say, and these are the words I say, based on the below comparables, I am suggesting a more appropriate fair market value would be around $300 and something thousand, which is the equivalent of $222 per square foot. So that's what I asked for. In the end, I got to, when I did this one back in 2018, I asked for $222 a square foot. I got it down to $247 a square foot. So I didn't get it all the way down to what I asked for, but basically, if you know without knowing my exact numbers, I kept it almost flat with a tiny bit of increase. Like I asked for below what it was already at. I was basically like, the comps say you're charged, even this past year, I was charged way too much based on the comps. And so both times I've done it, they have come back at a little bit higher from what I was currently paying, which again, I basically avoided a big increase. It's going to be hard to get it like lower unless you're just way overly assessed. And that's it. You take the letter, you follow the instructions. So I literally like wrote a letter in Word. I pasted a screenshot of my Excel sheet, my table that I made in Excel showing all my comps. I made it really easy, really simple to digest for whoever's reading the appeal. And then I sent it in to my county. In our case, Mike, you can actually file the appeal online. I think back in 2011, I actually mailed it in. I think I even might have mailed it in 2018. But you can do it online. So follow the instructions of where you file the letter. But all you're doing is filing a letter, a written appeal back to them. And then you will hear back from them in a certain time frame, depending on what it is. And this might be the sort of thing where I would make sure you have some sort of documentation of when you send it in. Because if your county's backed up or they claim they never got it or something like that, you've just missed the deadline. You can't do it again until next year. And so I would either submit it online where you have documentation, or I would do like a registered piece of mail where you pay a little bit of extra to make sure that it gets tracked and confirm receipt.
All right. So my taxes are going to go up $800. How much do you think I can actually get that down?
I believe you can get that down at least $600. And as a fun experiment.
Is there a money back guarantee, Maggie?
Here's the deal.
Okay,
as a fun experiment, I will do everything for you.
Whoa.
Hold on. Wait, you haven't gotten the catch yet.
Okay.
I will do everything for you. And if I can get your taxes down by at least, what does it matter? If I can get them down by any amount over $100, you have to buy me lunch.
Lunch
Can
where?
Equitax completely. Lunch at Ginya with an appetizer. That's a ramen place that we both like. Lunch at Ginya,
no appetizer, no drink.
No, with an appetizer.
The appetizers are like $15.
Yeah, I'm going to save you over $100. I have to save you over $100, and then you're going to buy me a $30 lunch. That is not as good of a deal as Equitax. Never mind, you can do it all yourself, bud.
Okay, fine, deal.
Okay, that was a good offer. And then you can use this template in the future.
Oh, by the way,
I'm going to find all your comps for you.
Yeah. Do you know the investment advice I've been giving you over the past couple of years?
Yeah.
I'm now going to send you a bill for that.
It's funny. I just bought some of the stock that you told me to buy earlier.
Oh, nice. Okay.
That was my point. When I said I will do this for you, Mike, it's because you have done a lot of you'll take it's so rare that I know more about something than you do. You will take something like, my DCP, whatever, and you'll do this crazy analysis and forecast in it in Excel. And I know it probably doesn't take you that long, and you really enjoy doing it.
That's true.
So I let you help me with it. But I'm happy to do this for you, and I'm excited to do it for you. And I'm really I'm eager to see how much it saves you.
All right. I'm excited. I will send you my previous year's tax assessments.
And then I'm not going to do your rental properties for you, but I think you should consider looking at your rentals and just seeing what your taxes are.
Okay.
So that's it. I know this is just something that would be easier to follow as like a YouTube video or something. But I did my best to walk through that. We'll put step-by-step instructions in the show notes also, and we will include a template that has been successful for me, and we'll see if it works. Look, I have had a 200 I've had a 100% success rate every time I've appealed my taxes.
A 200% success rate will also be a good Maggie stat.
And the first time it was with a third party. Second time I did it myself. Both times were successful. So I got a lot of confidence. That's not a lot of tries under my belt, but I do have a lot of confidence that this can help you. And look, it certainly can't hurt. And if you get adept at doing this, the whole process will take you maybe an hour and a half, and perhaps save you, $500 or $600. So hopefully you guys got something out of this. Our top 3 takeaways for this episode.
And I'm going to let you read these, Maggie, because there's still no show notes for me to look at.
I was going to say, I don't even know if we need to do these. Our top 3 takeaways are you can and should appeal your state property taxes. And, like Mike, you often are a big proponent of, like, you should pay attention to like where your money is going, which I'm shocked you never have in this area. Actually, I'm not shocked because you said yours haven't gone up. But anyways, you can and should appeal your state property taxes. There's 2 ways you can do it. Number 2 is there's 2 ways you can do it: DIY or use a third party. And let's just not do top 3 takeaways.
Okay.
Unnecessary. Okay. I hope this was helpful. Mike, do you feel like you got the answer you wanted back to your text?
Yes, I'm quite pleased that you are going to show me how this is done. I look forward to seeing your success. And then when you are done, I will use this template and do it every year, assuming you can actually get some results.
Well, that's an interesting comment you make about do it every year. This is not something I would suggest doing every year. When you get like $100 increases on your taxes, I'm not actually sure what would happen, but I have a feeling the county would get some fatigue of receiving a appeal from you every single year. I have only done appeals when there's been a big jump, a big single year jump, or wait a few years when you've like added up a bunch of jumps in or increases in your taxes. Just to be clear, I don't recommend doing it every single year.
Okay.
Perhaps
and I will do it every few years. When
every
there's a big
few
jump.
years. Yeah.
All right. Well, this will be fun. Thanks, Maggie.
Okay. No problem.
All right. Well, thanks everybody for listening. If you've been challenged or inspired by what you've heard, please rate and review the show. You can also subscribe to make sure you never miss an episode. If you have any thoughts or questions, we'd love to hear from you, and you can leave us a voicemail or text us at 404-981-3370 or hit us up on Instagram.
And we're serious. If you have any thoughts or questions, we'll do entire episodes just to answer your question. I mean, Mike just sent me one text this morning, and all of a sudden we're changing our show schedule for the next month. And we're sliding this episode in to come out on Monday.
All right.
Okay.
Thanks, Maggie.
Thanks, Mike.
All right. Bye.
Bye.